Imagine a world where every EV battery, drone, and spacecraft is safeguarded against catastrophic fires before they even start. That's the promise KULR Technology is making. A world where thermal safety isn't optional, it's built into every mission-critical device. But here's the real question. Is KULR truly at the center of the energy revolution, or are investors chasing hype that could run out of power? Stick around, because today we'll dive deep into whether KULR stock deserves a spot in your portfolio, or whether it's too early to take the risk. Hey everyone, it's Robert. Welcome back to The Alternative Investor. Today we're doing a deep dive into KULR Technology Group, ticker symbol KULR. If you're looking for early-stage innovation plays tied to battery safety, aerospace, and defense technology, KULR might be a name you need to know. Make sure you hit that like button and subscribe because we're about to break down whether this stock could quietly charge up major returns or quietly burn out. At first glance, KULR might seem like just another small tech company chasing the EV boom. But look closer, and you'll see they're building the backbone for energy storage safety, solving one of the biggest hidden problems in electrification battery fires. KULR specializes in thermal management and battery safety, developing technologies like the thermal runaway shield and cell check. Their systems are used in aerospace, military applications, EVs, and industrial energy storage, anywhere safety and reliability are critical. And with an exclusive license to NASA's battery safety technology, KULR isn't just talking about innovation. They're deploying it in some of the world's most demanding environments. Now let's talk about the numbers because hype is nothing without the financial foundation to back it up. As of the latest earnings report, KULR generated $10.74 million in revenue for 2024, representing a 9% increase from the previous year. That's solid growth for a company this size, but they are still very much in investment mode. The company posted a net loss of $17.52 million, although that is an improvement over the $23.69 million loss from 2023. Operating losses narrowed as well, showing that management is keeping an eye on spending. Most importantly, KULR dramatically strengthened its balance sheet. Cash on hand jumped to $29.83 million at the end of 2024, compared to just $1.19 million the year before. Part of that cash increase came from the addition of $20.28 million in Bitcoin holdings, which the company is now carrying as a non-core asset. While that's a controversial move for some investors, it does increase liquidity in the near term. So how does Wall Street see KULR? Analyst coverage is light, which is common with small caps, but sentiment is largely bullish. The current average price target sits around $5 per share, suggesting a potential upside of more than 265% from today's price of $1.37. Some forecasts go even higher, pointing to a $6 price target if KULR can scale its partnerships and licensing deals effectively. The flip side is obvious though. If commercialization lags or competition heats up, this upside could evaporate quickly. KULR's growth plan is built around three pillars: defense, commercial expansion, and licensing. In defense, KULR is winning contracts with the United States Navy and positioning itself to provide battery safety systems for critical aerospace and military missions. On the commercial side, they are partnering with companies like BRP to enhance battery safety in e-mobility vehicles. And finally, their licensing strategy is quietly becoming a major revenue engine. KULR is monetizing its proprietary technology by licensing it to battery makers and manufacturers, allowing for rapid scale without heavy capital costs. In fact, intellectual property licensing contributed over $2.68 million to revenue in 2024, and management believes that number could grow dramatically as demand for safe battery systems explodes worldwide. For investors looking to participate but manage risk, selling options on KULR could be a smart strategy. Because KULR is a volatile small cap, premiums on puts and calls are relatively attractive. Selling cash-secured puts at lower strike prices allows investors to potentially acquire shares at a discount while collecting upfront premiums. And once shares are owned, selling covered calls can generate additional income while holding for the long term. This type of option strategy can turn a highly speculative investment into a more income-producing asset while waiting for commercialization and scale to drive the stock higher. Of course, it wouldn't be a real deep dive without being honest about the risks. First, KULR is not profitable and may need additional capital to fund operations if growth takes longer than expected. Second, competition in battery safety and thermal management is fierce, with larger players like Honeywell and 3M expanding their efforts into energy storage systems. Third, the Bitcoin holdings, while valuable for liquidity today, add a layer of balance sheet volatility that could backfire if crypto markets turn sharply negative. And finally, regulatory delays or slower than expected defense spending could push back revenue milestones and hurt investor sentiment. So is KULR Technology Group a hidden battery safety gem, or a risky bet still waiting for its breakout moment? The opportunity is massive. Battery safety is not optional. It's becoming mission critical as EV adoption, grid storage, and aerospace electrification expand. With real NASA technology, growing defense contracts, and licensing momentum, KULR could be a serious winner over the next few years. But this remains a high-risk, high-reward investment. Patience and risk tolerance will be key for anyone stepping into this name. Now I want to hear from you. Are you betting on KULR's future, or do you think it's too early to tell? Drop your thoughts in the comments below, and if you found this deep dive helpful, smash that like button, subscribe for more, and I'll see you in the next one.